Hey there. Good morning, everyone. Lee Lowell here, smartoptionseller.com. Hey, listen, I'm getting a lot of questions lately about exercising and assignment of options, especially exercising options early before expiration. And if you're the seller of the option, will you get assigned early if the stock moves in the money? So that's what we're going to talk today a little bit about when we get to our free options education. But first, let's get started with our Saturday synopsis. If you're not familiar with our videos, again, my name is Lee Lowell. I'm from smartoptionseller.com, and I like to make these Saturday synopsis videos where we take a look at the charts, we look at the index, we look at individual stocks, and see what's happened over the prior week's worth of trading and see what may happen in the upcoming week. So sit back, relax, let's take a look at the charts and see what happened, and then we'll get into the free options education about early exercise and assignment. So what happened this week in the market? Let's open up the charts, look at the SPY. It's the exchange traded fund for the S&P 500. We always look at that first because it's the best, broadest measure of the overall market. Moving on from the end of last week, where we had last week, Thursday and Friday, had a down move in the market, which started this overall selling trend after the big and beautiful V-shaped recovery of the stock market that we got. Coronavirus down move and then the recovery. Finally, we got some froth taken out of the market. Last Thursday and Friday started the down move here. And then the rest of this week, as I mentioned last week, we would probably have to digest those big moves and get a little bit of sideways traction, which we did these few days in here. And then Thursday and Friday, we had a little bit more of the down move. And we always look at the moving averages because on charts, people tend to follow the same moving average lines or the same technical indicators. So things start to become a self-fulfilling prophecy. Now, on my charts, I always use the 20-day moving average is the blue line, the red line is the 50-day moving average, and the 200-day moving average is this one right here. And the 200-day is like the granddaddy of moving averages. That is the line in the sand for a lot of stock charts. So we had discussed last week that a lot of the indexes were falling on the 50-day moving average, which is the red line here. And so the SPY, we had the move last week. This is the end of last week. And then the rest of this week, all 4 days, we had a shortened trading week because of the Labor Day holiday. And so this week, we had 1, 2, 3, 4 days of trading. And the SPY bounced right off the 50-day moving average right here. Okay, so that is a support area. We want to see that hold. And let's look at the NASDAQ real quick because that is the one that had been taking the brunt of the selling. Most of a handful of NASDAQ stocks were driving this market higher and it was pulling everything up with it. So it had a very, very large move. So last week, Thursday and Friday, had the big down move. And then this week, 4 days worth of trading, had a little bit of up move earlier in the week. And then Friday, started to sell off again. Now it did close below the 50-day moving average. It was a little bit above it, a little below it, and then it closed down below the 50-day moving average. So we want to watch the NASDAQ very closely over the next few days. In my opinion, we'd like to see where things close 3 days in a row. If the NASDAQ closes below the 50-day average for 3 days in a row, then we may start to see more selling occur. If the NASDAQ closes above the 50-day moving average, then I feel more confident that the market is going to move back up again. So we've had a good amount of the froth taken out. Had this large down move. As I said last week, stocks take the stairs up and the elevator down. So the down moves are usually very quick, very violent. Scares out a lot of people. But once we fall on one of these moving averages, we tend to start to see the selling abate and things start to trade a little sideways to digest the move. And hopefully, most likely, the market should go back up again. But we have to see where things shake out. Let's look at the Dow Jones, which has been the laggard of the three as far as the up move goes. Had to move down last week, Thursday and Friday. And this short week kind of meandered around just like I thought it would. You know, when we have a big move, the market likes to digest the move. So that's when you will see some sideways trading, which we did in here. You can see it. Still above the 50-day moving average, which is good. It fell below the 20-day. Okay, the 50-day moving average is right here, 200-day. So the Dow's a little bit stronger. didn't fall as far, so that's a good thing. Let's go back and look at the SPY again and glean a little bit more information from there. So we had a little bit of sideways action this week, and it came right down to the 50-day moving average. So that's good. I like to see that. The moving averages are still sloping upwards, which is good. We like to look at the RSI down here. RSI indicator is an overbought, oversold indicator. Above 75, things are getting a little overbought. Down below the 25 level here, things are getting a little oversold. So we're right here in the middle, 45. That's good. That means it's not overbought, not oversold. So I'd like to see things just start to meander around here a little bit and possibly move higher again. I want to look at the futures because the futures trade almost 24 hours a day, and it gives a better picture of how things shake out. So this is the E-mini S&P 500 futures, and you can see how it closed right tagged right the 50-day moving average right here. So it is acting as support. So we want to see this 50-day moving average hold. RSI down in the 40s, so that's good. Like to see it right in the middle. Let's look at the NASDAQ futures. E-mini futures NASDAQ. Same thing. Got the 50-day moving average here. So it closed a little bit below it, just like the composite index did. Closed a little below the 50-day moving average. So we want to see this hold. We want to see this thing hold right here. Again, down in here. Now, let's take a look at the VIX because the VIX was a little bit telling this week also. Like to look at the VIX, which is the fear indicator. And it also is a gauge of how options prices are trending. When the VIX goes high, option prices become more expensive. When the VIX comes down, option prices are cheaper. And it also moves inversely to the market itself. Now, what we saw last week, let me just discuss this. So as the market fell at the end of last week, the VIX popped up. That means people were panicking. They were buying some downside protection in the form of put options. So when the market drops, the VIX pops up. Now, what we looked at last week is that when the market was making its moves up last week, the VIX was also going higher, which I mentioned in last week's video. That was a rarity. We don't usually see the market move up and the VIX move up at the same time. So this little move right here happened when the market was moving up. Now, this week was also very strange. The market started coming off, but yet the VIX started coming off as well. So that is telling to me that I think this selling in the market is done with. People were getting a little bit more secure with things. They felt a little better. So volatility was falling as the market was falling as well. That means things are probably stabilizing. So let's overlay the VIX on top of the SPY, and I can show you how that works. Let's edit this. We'll put the VIX in here, apply that. Okay, so now we have the S&P 500, the SPY, and the VIX. So here's the SPY up here, and here's the VIX down here. So as I mentioned last week, at the end of last week, the market was still going up, but the VIX started going up too. So that was a little bit of a telling sign that, hey, we may be hitting the top here. Things are getting real frothy. But it was also telling, as the market started moving down this week and the end of last week, you would think that the VIX would go up, but the VIX started coming down. So that is what we call a divergent move. That does not usually happen. When the market goes down, the VIX should have been still popping upwards. But it's telling me that people are not as scared as they were at the beginning of this down move. Okay, so they're thinking, okay, we're on the 50-day moving average support line. I think the selling might be over because the VIX was moving down at the same time. It's not foolproof, but it is telling me that I think the fear may be subsiding. People are, getting their heads back on right, and I think we may see some support here hold, and hopefully the market will move back up. And that I'm thinking that because the VIX started to come off as well. So that's a little bit of a telling sign right there. Let's take a look at some individual stocks. Let me get rid of this for a quick second. So we have a nice clean SPY chart. Let's take a look at some of the stocks. So some of the biggies in the NASDAQ, because they're the ones that have been driving the market over the last few weeks. First of all, we'll take a look at Apple, because Apple got hit pretty hard at the end of last week and part of this week as well. So here's where Apple started coming off at the end of last week, and then we had the shortened trading week. So it's a little bit sideways action with a little bit of down move at the end of the week. Stayed in this little range here, coming on its 50-day moving average. We want to see the 50-day moving average hold. I think Apple's had a pretty good sell-off here, took some of the froth out of it. All that enthusiasm from the stock split at the end of August, I think took some air out of the stock. So hopefully we see some support come in here, and it can meander a little sideways and then work its way back higher. We've got the RSI right in the middle here, so I'm thinking that things are stabilizing here. So that's Apple. Let's look at Amazon, another biggie, of course. Now Amazon closed below the 50-day moving average. So we'll have to watch Amazon pretty closely. Now, obviously, Amazon is an incredible company. Everybody buys stuff from Amazon. So if it comes off, I can't see it coming off too far. We got the move, the froth taken out of the market. So we're back to where we were, a couple months ago. And if the 50-day moving average can hold, if the indexes could open up higher and start moving higher, then Amazon will start moving higher as well. So we got Apple, Amazon. Let's take a look at Google. These are all the big name players that were a big part of this drive higher. Google also closed below the 50-day moving average. We'll have to keep an eye on that one as well. Microsoft was another big one. Same thing. So these biggies are getting hit. They're giving back some of their gains. People are taking money off the table. Microsoft has closed below the 50-day moving average for a few days in a row now. So there could be more selling involved in Microsoft. You got the 200-day moving average lurking down below here around the 180 level. The moving averages are still sloping higher, starting to curl a little bit here. So you got to keep an eye on Microsoft. This could be one of the softer stocks of the Nasdaq. There could be more selling involved in Microsoft. Let's look at Tesla because that's also a biggie. Tesla had come off too after its stock split, just like Apple did, bounced right on the 50-day moving average. The 50-day moving average is a widely followed moving average. So you'll see a lot of stocks and indexes bounce off the 50-day moving average. So Tesla bounced and actually went up part of the week here. So Tesla's looking okay, right in the middle here in the RSI. So that's good. So Tesla still remains pretty decent, pretty strong. Moving average lines are sloping upwards. That's what we like to see. You want to look for upward sloping moving averages. What else do we have for the biggies in the Nasdaq? I think we hit them all. We got Facebook as well. Let's take a look at Facebook. Facebook also got hit. Here's the 50-day moving average lurking underneath. So watch for Facebook to either come down to the 50-day moving average or meander sideways. Okay, that's what's happening here. We want to digest these big moves. And after a big move, the market tends to move sideways, digest the move. And once they understand what's happening, the market should start to move back up again. So that's it for individual stocks. Let's take a look at the SPY one more time just to see what we think for next week. We know the governments around the world are still in the markets, backstopping everything. Here in the U.S., the Federal Reserve is keeping interest rates extremely low. Coronavirus, we've got these vaccines that hopefully will come out by the end of the year. So you got people in a decent mood. The stock market is really the only place to get a return on your money. So there is a lot of support under the market. SPY tagged right this 50-day moving average. So I'm thinking meander, a little bit of sideways, market catches its breath, and then up to the upside again. That's the way I see it. If it does happen to come off again, you've got the 200-day moving average lurking down below to catch it. So you're at 334. 309 is probably the next level of support. I can't see that really happening. I think the path of least resistance is still going to move higher after we trade a little sideways for a while. Okay, so that's it for the assessment of the market and our options information for today. We will be talking about exercising an assignment of options before expiration. I get a lot of questions. We sell put options in our newsletter. And people always ask me, Lee, what happens if I get assigned on my options early, the options that I've sold put options. What happens if the stock dips below my strike price? Will I get assigned the options early? And my answer always is options. If you're a smart option seller, if you're a smart option trader, you do not want to exercise options early. it is not beneficial to exercise an option early, even if it is in the money. There's no point to exercising an option early if it is in the money. And I'm going to show you mathematically why that is. So let's take a look at my cheat sheet. I always create a cheat sheet for everyone to understand how things work. So don't be afraid of early assignment. So if you're an option seller and you've sold options that have now gone in the money, don't worry so much about being assigned early, because typically it does not happen. I'd say 99% of the time you will not get assigned early on options, and it's just not smart for the option buyer to exercise early. So if you're an option buyer and you have an in-the-money option, you do not need to exercise it early, and here's why. If the stock is still moving in your favor, right, and you hold the option, if you're a call option buyer or if you're a put option buyer, and the stock keeps moving in your favor, that option is still increasing in value. Okay, there's no reason to all of a sudden exercise it just because it's gone in the money. And here's mathematically why it is not smart to exercise an option early. So we're going to look at a $50 call option as our example of why this works. So let's say you're a buyer of the call option and you bought a $50 call option and it still has 3 months left before expiration. And the stock that you've bought that call option on is now at $60 per share. Okay, so you've got the $50 call, the stock's at 60, so you're making money. You've got a lot of money built up in profits so far. And right now that $50 call option is worth $12 per contract. You bought the 50 call, it's now at $60 a share, but that call option is worth $12 per contract. And the $12 is made up of, there's two parts to every option. You've got the intrinsic value and the extrinsic value. That you have $10 of intrinsic value. That means whatever the amount the option is in the money, it's equal to the intrinsic value. So you've got a $50 call, the stock's at 60, so that's a $10 difference between the 50 and 60. That's the intrinsic or the in the money portion of the option price. So you've got $10 of value built up. The extra $2, so the option's trading for $12, where does that extra $2 come from? That extra $2 is what's called time premium or extrinsic value. The extra $2 is made up of there's time left before expiration. You got 3 months left before expiration. So options take into consideration how much time is left. So they adds a little bit of premium. And the other is made up of volatility and what I call hope, the hope factor, the hope that the stock's going to keep going up. So the options will be made up of the extrinsic value and the extrinsic value. And in this case, this $50 call is worth $12 per contract. It's got $10 of its intrinsic and $2 of time premium. So if you're thinking, hey, I bought this $50 call option and the stock's at 60, I want to exercise my call option because I want to capture that money. Well, what will happen is that if you exercise that $50 call option before expiration, you're going to lose out on the $2 worth of time premium. Now, how does that happen? Well, if you exercise the call option, you're now going to be long shares of stock from $50 a share. That's good. But if you wanted to turn around and sell those shares that you've now purchased that are in your account and you sell it at $60, you're only going to make $10 of profit. Right? If you bought the stock at 50, you exercise your options to buy the stock at 50, that's great. And now the stock's at 60, you turn around and sell those stock shares in the open market. You're only going to get $60 for them. So you're going to make $10 of profit. But if you sell the option instead, you're going to get $12 of profit instead, because you're going to get that $2 of extra time premium. So if you said, hey, I don't want to exercise my option, I'm just going to sell this option instead, I'm going to get $12 for it instead of the $10. So that is why it's so much smarter to sell out an in-the-money option instead of exercising it, because if you exercise it early, you're going to lose out on the extra time premium. That's how exercising the option works. So if you're on the other side, the option seller, and you've sold options, if you sold a call option, if you sold a put option, don't worry about getting assigned early. As long as there's still extrinsic or time premium left in the whole option price, you don't have to worry about being assigned early, except unless there's option buyers who are naive or they're inexperienced, or they just don't know enough about how options work. Every once in a while, you may get assigned early because the option buyer doesn't understand the difference between exercising versus selling it. So if you are long call options or long put options in the stocks in the money, your options in the money, you don't have to exercise it to get the gain. It's smarter to sell it. So right down here, smarter to sell it instead of exercising it. Some traders just don't know that. So that's the difference right there. So you want to make sure if you got in the money options, you don't have to exercise it. It's better to sell it out. And if you're on the other side as the option seller, don't have to worry about being assigned early. So I get that question all the time, and that's really the reasoning why right here. Look at the math, okay? So that's it for today. That's your free options information. We looked at the charts. Lastly, if you like this video, YouTube, don't forget to subscribe, and you'll be notified when I come out with a new video every week. Give me a thumbs up. Give me a comment. Tell me what you like, what you don't like. Ask me questions. I'm always here to answer. And lastly, our website, go to smartoptionseller.com. Don't forget to download our free put selling basics guide, free guide all about put selling. If you don't know much about us, you can always look at our testimonials. You can look at our track record. It's open to the public. And lastly, our services tab right here talks about our 2 newsletters, Smart Option Seller newsletter, Vertical Spread Trader newsletter, and our one-on-one coaching if you want to get started in options, and we can help you with that. So that's it for me today. I hope everyone has a great weekend and a great week ahead. This is Lee Lowell signing off.